Aloha, 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 aloha. How's everybody doing? So I hope everybody's having a great day. This is 50 pips, rocking and rolling here. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. The fact you're in here means you've read to understand you accept all the disclosure disclaimers here on the website and everywhere else, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. How's it going, guys? Yeah, we'll record the session. I'm trying to record it, or hopefully it will work. And I'll post it on YouTube later on. So again, I'm not sure if I'll be able to do a session, the weekly wrap up on Sunday, probably not. So I'll do this. If anything crazy moves, we'll try and do some kind of a free session like this on Monday, depending on the market. Keep in mind, U.S. markets are going to be closed on Monday, right, for President Day holiday. So what's going on? What's going on? What's going on? Welcome to all the usual suspects. I love these sessions. We got 11, just looking through the participants' usernames. We've got Mario Draghi, we've got Trichet here, and we've got Yaris Varoufakis in the house. So rocking and rolling. We got some celebrities in here today, right? Along with all along with all the usual suspects. Okay, so you gotta love people's logins. So guys, not a lot going on, a bit of a dead session. So I just thought I'd keep busy and just do an impromptu session. So we'll naturally talk about what's been happening in the market and what, review the week and review what we expect to happen next week. But I just want to keep it fairly free floating session. I got nowhere to go. And so shoot, any questions open, any pairs anybody wants to discuss, anything specific, I'm more than happy to look at it. So we'll use the usual first come first serve. So just shoot what pair you want to review. If you have a specific question on it, just make sure if you're looking at something, just tell me, Euro USD 4 hour or Euro USD 4 hour, 1 minute, whatever, right? And we'll start to look at it. Okay. So yeah, sure. So for JP wins because he's the first one in out of the starting blocks. And can you look at cable? Sure, I can look at cable. Now, unless you have a specific question on cable, I'm going to give you my outlook, what we've been looking at, and we'll discuss how we've been trading this too, and just trying to keep it open, right? So what's happening on cable? So we've been talking about cable for a long time. Okay, we've been very bullish sterling in general, so we've been bearish Euro GPB for years, right here basically. On cable, we've had a lot of whipsaw action. We've got a lot of wheeling and dealing with the dollar. And basically, we're talking about this broader consolidation, this broader trading range that is highlighted on the weekly chart, right? As usual, if there's some new guys in here, when you see two moving averages on here, we don't think they're magical. We don't think they're special. We just have them on there because it helps give people a sense of direction. And the ones I will have is pretty much the 100 and the 200 simple moving averages. You might have a 50, that's a green one. If anybody really wants something a bit more short term, we'll put that in, right? So we've got Mr. Varoufakis is asking for Euro USD outlook. Well, it depends on what you're going to do. So, right? We'll talk about Euro in a second too. So basically here on cable, we're stuck in this range, right? And we think there's a lot more edge trading at extremes as always rather than in the middle of the range, right? So as we approach back down in this middle of the range, a lot of people were saying, okay, cable's going to die simply because it broke 150, right? We thought basically this is a really interesting buying opportunity because the whole 150 to 148 zone was a major support. Our real line in the sand really for more aggressive action from an intra-week perspective, etc., was that 148. So we're looking basically to buy moves into 150, right? And basically what we're looking for is we're just looking for a healthy market, and we're looking for a correction ideally back into mid-range, right? Well, that mid-range is highlighted by the two moving averages, right? One is coming in at 160.40 and the other is coming in at 159.80. And also by the 50 back, so the retracement, 50% retracement of the move from highs to lows, which would give us a target around the 160.70s, right? So everything seems to be pointy to this mid zone, mid area, right? So that outlook is our outlook. We've been talking about this for weeks, for months actually, on the in the Sunday YouTube videos. So that's pretty much where we're at, right? And again, if you go, I don't know if that answers your question, but if you go basically on a shorter term chart, something like a 4-hour chart, you can see that all those moves, right? We had some very interesting moves on, let's do it this way. We had some very interesting moves on cable, basically on all these moves back into the 150, right? And we always say we don't like to get short into support and we don't like to get long into resistance. We like to buy support and sell resistance. We like to buy red and we like to sell green. And you see here, we come through here already. We see some support and you got a reversal candle here and a nice little support is building right at this 150. Then a lot of people getting really excited when it just pierced, right? And the bottom and the bottom line is this could still hold very heavy, but on these presses here, right, 1 and 2, what it needs to do, this is not a sign of weakness just because it at least the way we look at it, because it breaks the 150. For us, the sign of weakness is it breaking the previous support and attracting new sellers at lows. So unless it breaks the support and attracts new seller at lows and then could give the impetus for the next move back down into that 148 we're talking about, what we're looking here is failure to attract new sellers at low to get long either with tight stops or wider stops for the rotation higher. Does that make sense? So basically that's that's what we've been doing now. Moving back up, we've moved up, we came back down. This was a previous resistance acting as support, beautiful little support through all those data points, and we're ramping up higher, right? And we're holding these highs. As we said yesterday, a lot of people asking us about shorting cable. You know, we said there's really no edge. You know, there's really no edge when it moves like that. When you get sharp move on inflation reports, similar to an ECB move, it's very rarely retracing. It's very rarely to see price jump up 100, 200 pips and then retrace, right? So you're much better sticking with the trend or managing your existing positions. So right here, you know, the fact that it's breaking free, we'd assume, you know, a lot of the big swingers will still be hiding behind here. Some people will start to trail their stops, but really, as long as we hold here, you know, expect this to continue to try and trade higher, right? Moving back towards those higher levels. Again, today's a bit of a dead day. There's not a lot of data. We could still keep getting a lot of comments out of Greece, geopolitical risks, so it could get choppy. But bottom line, as long as that 150 hold now, it looks like it set some kind of an intermediate cycle bottom, and it's going to try and rotate back higher. You know, we'll have to see how it trades next week and what happens. There's clearly a lot of event risk, even with the market. U.S. markets close, less liquidity in the market on Monday, and we've got all this potential stuff out of the Eurogroup. That's pretty much where we're sitting. Our outlook on cable. Okay. Let me just go through some of the questions to see if anybody has any questions on cable, right? Please, can you post the link to your YouTube channel? Can you see at the bottom left, you've got, I hope you can see it. At the bottom left of your screen, you should have a little link which says latest charts, latest videos, interviews, etc., right? So if you click on the video, you'll see, you'll go on the blog and you'll get all the videos, and there you'll find the link to the YouTube channel, okay? But if not, I'll just post it afterwards. Or if you search on YouTube 50 pips, you know, you should find it. But I'll post it on YouTube, on Twitter and the blog. I'll post the video as soon as it's over, okay? Follow-up question. Do you think the dollar index is going to fall too, hence cable going up? Well, you know, again, I would keep it, especially if you're a junior trader, I would keep things very simple. I would look at one chart of the time. Bottom line, dollar index, right? You know, it's going to be driven by that. Dollar index majority is euro, so it's a lot more, it's going to be driven a lot more by euro. But, you know, of course, really here what we're seeing is a dollar move, right? You had dollar strengthening with euro going down, cable going down, Aussie going down, Kiwi going down, and yen going up. CAD going up, and now what we're seeing is we're just seeing a healthy move, right? Some unwinding, some profit taking of these dollar longs. So you're seeing euro popping higher, cable popping higher, Kiwi and Aussie trying to pop, CAD trying to retrace a bit, yen trying to retrace a bit. But again, the dynamics on yen and CAD are a bit different, but sure, right? So, yeah, the point is that's the way we look at the market. We look at the market. We like to engage at extremes, right? Because the way when we engage at extremes, it means that it gives us a chance to. It's harder. You need to do a bit more work, but it gives you a chance to trade with much tighter risk reward, right? So the question is on cable longs. It's tricky now. Again, it depends if you're trading intraday or not, right? So, if you're trading the swing, any kind of retracement, is good. Maybe 150, 152, something like that is good to look back in swings. But again, it all depends on your risk reward. If you're trading it from an intraday perspective, then I would use the previous day range to guide you, or the most recent support or resistance to guide you for stop placement and take profits. But of course, these markets are a bit tricky these past weeks because either you've been an extremely nimble scalper, or what's really happened is a lot of the longs and a lot of the shorts had already made their bets, had already made their beds and bets, right? So what that means is that when the move starts going, it's really tricky to get into it. Now, of course, I'm sure you're going to find somebody on a forum, somebody in a book, or somebody on a blog saying, you buy it when it rips, etc. But bottom line, it's very tricky to get into moves when they really start going on news events or things like that. Most likely, you really need to be positioned ahead of time. If not, you find yourself chasing, you find yourself trading with much wider stops. You'll find yourself trading with possibly buying highs or selling lows, even though they're intermediate highs or lows. It's just, you're kind of making it harder for yourself. I feel you end up chasing a lot. Okay. Now, do I expect the Fed to write? Yeah, whether I think Fed's going to raise rates or not has absolutely nothing to do with your trading, right? As far as I'm concerned, especially if you're trading intraday or whatever, you're much better just focusing on the charts, focusing on the support or resistance on each chart in your setups, right? Then as long as you, sorry, as long as you manage your risk accordingly, if something happens, right? I think you can make a really good case for them not raising, or you can make a good case for them biting the bullet and raising anyway. Bottom line, I think it's a lot of an intellectual discussion. It might make sense, but I think ultimately, unless you're running more of a macro view or bigger swings, for an intraday perspective, it doesn't make that much of. You're kind of making it a bit harder than you should be, right? Yeah, yeah, exactly. Sitting ducks, Giannis, right? So, and again, right here, cable caught a strong bid. Everybody thinking, UK data was good, thinking about rate raises in the UK. Then all of a sudden, we got mixed messages coming out. The market not sure what to think. Oh, data's not so good. Oh, no rate hike. No rate hike soon. And then all of a sudden, bam, we've been getting really good data. You got Carney yesterday saying it could go either way, but essentially, bottom line is more in the direction of rising rates or not. So that takes a lot of the stuff, uncertainty out of the equation. So a lot of people who got positioned wrong or selling the lows on cable, quickly covered. And when you get that kind of announcement, especially on the inflation report, a lot of people which were stuck shorting the lows, what happens, they'll start to cover quick, right? And then everybody's looking for the next short. But since there's been such a big change, what will happen throughout the day? Any dip, trapped shorts are going to cover. So you just see very shallow dips, shorts are covering, bam, 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 and it just grinds higher until the end of the day. It's really important to realize these dynamics and understand what's going on, right? AUD CAD, there seems to be good make either side one-to-one relationship deviation. Either side seems to be good. Yeah, again, that's really a pair. I'd never look at that chart unless somebody asks. Um, Absolutely no interest in trading that for me. Again, I want to trade the more liquid pairs where I've got more liquidity, tighter spreads, more activity. They'll tend to be a lot more technical, right? So as general rule, I would stay away for some of the funky pairs. I know people love to trade those, especially guys trying to make big calls love those, but I don't think there's an awful lot of edge trading those. We'll look at the chart again, as long as the chart's on. I have the chart here. I don't mind looking at it. I don't know if you have a specific question, but right here, it's just stuck. And again, this is a tricky one also because you've got all the wheeling and dealing that's going on the commodities side, right? So again, what to say? I mean, from a monthly, it's just big kind of chop area. Not a lot, not a lot of interest. Weekly, again, it's still kind of stuck here. Really, it doesn't look cheap enough for me to buy, and it doesn't look expensive enough for me to sell. Going on the daily, again, a lot of wheeling and dealing. It's not something I'd be particularly interested in. If you have a specific question on the chart, I'm more than happy to discuss it, but no real interest from my side, right? Yeah, sure. What's going on Euro? So on Euro, we discussed this chart, right? So basically, we discussed the fact that we were looking at Euro to put in a cycle low on the whole SMB fiasco, whatever you want to call it, right? That whole range. So what we had some lows print there, and then what happened, actually, this is going to be an easier chart, right? And then we got the final gap down on the Greek election results. So moment of panic, right? So usually those are very nice areas to look into, put short-term bottoms or lows, right? So we put in that bottom. So right here we've got kind of like a top in January, 120-ish, and we got that low, 110.90s. So again, all the January effect guys are going to be trying to decide, have we put in a high for the year or have we put in a low for the year? Big question. Market will tell us soon enough. But again, what we said, if you remember, again, in the free Sunday outlook, right when we had that gap down on the Greek results, we said, okay, we've put in a low. Look on what's going to happen tomorrow. So the Monday, we said, if we trade back below that 112, we had German data coming out, EU data. If we trade back below that 112 on the Monday, following the Greek election open on Sunday night, this is likely going to hold very heavy move back into 107, right? If we can't hold below that through the data release, don't be a sucker. Don't get stuck shorting lows on the worst point of possible news, everything priced in, because we'll likely see some kind of bounce. Now, it doesn't mean it has to go to 150, but you'll likely see some kind of bounce, and we're stuck inside this range, right? So right here, it's holding and it's bouncing. We're stuck inside this, pretty much the way we call it, broader range is 121's high, 116.50's mid, and 112 low. So we're kind of stuck here, not a lot going on. Now keep in mind, even if you look at it from, let's look at it on a daily perspective, and let's put, people love the moving averages. Let's put some moving averages on here, right? So 50, 100, 200. So you see here, we could easily go all the way back up into the 50. That's 117 white D. We could go back into that 121, which is our high range, and still hold a bearish trend and ultimately try and break down the lows, whatever. What we're seeing is just a healthy correction in a market which is being positioned in only one direction. And as we always say, it's not healthy for the market to only move in one direction for a sustained period of time. It's healthy to see two-sided action. So right here, what we're experiencing is just some healthy two-sided action, right? From a shorter term, yeah, sure. That's what I was going to do. From a trading perspective, and this is a chart which we've put up on the blog for some time, really, right? We based at those lows right here. And we hovered. And the way we've been looking at this as the bull-bear zone and keeping it very simple. This is about a 25, 30 pip zone. Coming in from below, short, stop above these high, right? Come in, worked, paid, come in, didn't work, coming in from above, long, stop below the lows, paid, 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 right? So it's just not making it harder than it should be. It's just a zone, right? So right here, in terms of tight trading, this is pretty much done in terms of the range trade, not in terms of the swings, right? But let me just clear this up. Didn't mean to have this up. So right here, we're just stuck, right? And you see how it's trying to find direction in this mid-range, and that's what it is. We got this dip, which was the, actually, let's do it the other way. Let's get the thing back up. Which was the breakdown zone, and which is trying to be defended, right? You see this? You've got pretty much this whole wick. If you want to shade out the whole wick area, that's what the market is trying to protect, right? The shorts are trying to protect that area. And as long as this area is protected, we'll likely see some very choppy action. If we break above this area, then we think we're going to get a much bigger squeeze back into the 116s. But right now, it's still in a choppy range. It's holding a bit of an upside rotation, still risk of this squeezing on a positive resolution of what's going on in Greece. But broadly speaking, we're just still stuck in a range. So you just have to be a bit patient, right? Make sense? Any comments, any questions? How much of the webinar have you missed? I'm sorry, I don't remember what time we started, but we've just done a couple of pairs. Okay. So, yeah, on yen, not a lot's going on, right? We discussed the fact that we were stuck inside this range, and we felt that the what was interesting was the extreme. There was some scalping opportunities here to, as Zero Hedge called, the 118 tractor beam, right, to scalp back to the 118s. And there was some interesting opportunity, what we said the other day. If you're trying to get short, wait, let it come to you. Let it come to the next point where you got some kind of resistance here to smack it down. You would have got, it's a decent little trade, then comes back, a little scalping in the mid-range. But broadly speaking, it's still looking for direction here in a chop range, right? We're still, and there are likely going to be a lot of wheeling and dealing, people expecting more easing, people expecting less easing, the BOJ saying they're not going to ease. It's going to be very, very choppy. So I think there's three areas in terms of interesting possible areas for engagement in terms of scalps. It's right here in terms of this mid-range, those highs and those lows, but anywhere else is just likely going to be very, very choppy. Globally speaking, it tends to hold kind of a bid tone intraday. So apart from the days where it's looking very heavy, there's an interesting scalping. There are interesting scalping opportunities, but apart from that, I think there's little edge to be positioned, for big positioning on this, right? Yeah, I mean, what's happening? Shout out to Miss Gold, by the way. What's happening on silver? Silver. Not a lot's changing. It's slowly hovering here. Our outlook, and this hasn't changed for a long time, right? Since this weekly, we consider this to be an intermediate bottom, right? And we expect it to try and rotate off this bottom to try and make a move higher, right? So we got a nice little move off those 16s all the way into the 18s, and the 18s is the pivotal level, right? So right now we got a lot of choppy action. 120.50 to the upside, 118 here, 116, right? And our outlook is that it's going to be choppy, but similar to crude, it's in the process of trying to put in some kind of a base for an ultimate rotation back into the 2050s. So this is an interesting zone, but it's moving a bit slow, right? And similarly on gold, right? Gold, we're stuck in a current range we're looking at is 1300, 1250, 1200, right? With the mid-range being pivotal for action. So again, we came right back, giving you a nice little chance to buy this confluence of the 100 and the 50 back at 1219. You got a nice little pop here, and this is holding. So as long as this broader area holds, we'd expect to see it back into the 1250s. A lot is going to be linked to what happens on the ES if we rip higher, new highs. But look at that 1250 to be pivotal for action. But right here, it's in fairly strong support, and it looks like it's trying to hold it, right? Hey, Walking Trader, how's it going? Yeah, in terms of the equity indexes, I mean, we're seeing very strong move. We discussed the fact that we had where is it? We got the Nasdaq, beautiful hold of that 100 and that pivotal level, and we're breaking to new highs, right? So there's very little to the upside. Maybe if you get into those 45 zero zeros or something. So right here, the only thing I'm looking at is what's going to happen at these highs, right? I think there's the market's looking any kind of excuse to rally, right? You see it with all the Greece news hitting the headlines. Any excuse is good to rally. So going into the end of the week, what I'm looking at is action at highs, right? Is it going to blow its brains out, or is it going to rip higher? So it's going to be very interesting to see what the close is, how people are going to want to be positioned into the long weekend, because keep in mind you've got a long weekend with event risk on Greece coming in. So it's going to be very interesting to see how we close the daily. Basically, look at these recent highs as a bull bear line, bullish above, bearish below. You'd have to shoot me and I still wouldn't buy highs. If anything, I'm looking for tactical opportunities to get short to play some kind of a healthy retracement, but I'm really not in a hurry. If you're looking at the ES, we're right back into those highs. So similar thing, just looking what's happening here. I mean, in terms of upside targets, it's very tricky here. If anything, if you want to put a fib on here and you look at the 123 extension is coming in pretty much at the 2152s. Not that I have that as a target, but again, I'm very, very focused. I'm looking at tactical opportunities to maybe get short at failures into these highs. We discussed this last week, 2050 pivotal, and we said last Sunday, it looks like if it's going to fail, it's going to have to fail from a higher level, and we're at that higher level. So very interested at this level, going to be looking very, very, very closely to see how action evolves here. Okay. I'm just going through some of the questions, guys. Yeah, I don't have a set time. I wouldn't want to make the video too long, because if not, it's going to take ages to upload to YouTube. But, does anybody know how long we've been running for, Lewis or something? Yeah, Aussie's an interesting chart. We talked about Aussie here, and we talked about a very big level, right? Very big support here at the 77 and 80. Broadly speaking, the way we're looking at this is there's a big support here around that 200 on the monthly, and the chop zone is 77 support, 80 resistance. Okay. Something interesting has happened on Aussie. And again, it's something we discussed, right? We said on cable, after you said that move on the inflation report, it's very rare for it to try to retrace, right? So you're much better letting the trap shorts get out and playing the upside. On Aussie, something very different happened. Something very interesting happened, right? Remember what we got on that RBA day? We had right here, we had about a 200 pip move to the downside, right? And then what happens is on the same day, we had a 230 pip move to the upside, and we closed higher than we sold off from. So what we said is this is something you have to respect this. You have to respect this action. You have to respect this wheeling and dealing, right? So what happens is then you see we come all the way back down and we fail to take out these highs. So this is a very interesting place with a very, very, very interesting risk reward to get back long, very tight stop, basically flip longs. If stop below those lows, you're talking about a 25 pip stop with a huge profit potential if this really starts to rip here, right? So you see what's happening. We held that bid, and right, we're back at this pivotal level. So look at this zone today, right? We close above, then chances are really that we rotate all the way back into the 80 level. As crazy as that may sound, we close back below. Well, then it's going to continue to stay heavy. Those lows will likely try and come into play. As you see, the shorts are still keeping pressure on. But again, if CAD starts to move to the downside, if commodities start to rally, we get a bit of a risk-on kind of bid tone with positive news out of Greece, etc. Thanks, Lewis. It could easily start to rip. Again, it's a very tricky one. It's been driven by a lot of comments from the central bank. wheeling and dealing across the board. So right here we have to see what we'll have to see what happens. I'm currently sitting risk free, but I'm sitting long on Aussie. I'm looking to see if we get some more upside here. It's a very interesting pattern. I think you can make a quick case for the downside or the long side, but here we tend to favor that it's trying to find some kind of basing action and seeing what's happening across the board. It's going to try and rip back. Hey, thank Chris. Rip back to the upside. And it's a very similar action that we've seen on Kiwi, right? We talked about this on Kiwi. We've talked about Aussie Kiwi. They tend to trade together, but one thing which is being clear is that Kiwi's holding much more of a bid tone than Aussie, right? So you see here on the monthly, instead of being at that 200, we're pretty much at that 100, but we talked about that 73.60 level as being a pivotal level, right? Similar action to what we saw on cable in the sense of don't get excited just because it breaks a level. Look to the left. You've got a bunch of strong support here. It's not a clear-cut support as if you're at a low. It's a very messy, congested area, right? So right here we held and we're moving right back up. So this is looking like we're trying to rotate for a move back into 76s, right? So, and again, even if you look at it from a shorter term perspective, even on this 1 hour, we're chopping around in a zone, in a chop zone, but it's just that it's still holding a bid, right? You can go back on it's still holding much more of a bid than Aussie. Right here you had a nice little fake out of the range, right? Range respected, range respected, range respected, a lot of range trading here, nice little opportunities, then bam, fake out, breaks below, positive close, chance to get long, stop below those lows for a move back into the opposite side of the range. Very nice little action, very nice trading. And again, it hasn't been choppy, yeah, sure, but that you can't choose the market you want. You can't you got to do you get the market you get, then you can decide if you want to trade it or not. So it is what it is. We just have to adapt. There's a lot of different ways to adapt. Be selective about how you trade, how you manage your risk. That's the way you have to do it, right? So that's what's going on Kiwi. Yeah, sure, I saw that question. I'm sorry. So Euro GPB, what's going on Euro GPB? So we're hovering here. It's very tricky because you're getting a lot of wheeling and dealing with the BOJ going on. But basically, we're looking at it as a big zone, right? And the focus is, I think, the longs don't want these lows to break, and the shorts don't want these highs right here to break. The way we're looking at this, especially if we break back above this 100, this could easily start ripping back higher. I think it's very choppy. Right here, I don't think there's an awful lot of edge. Some shorts where we're trying to get aggressively short here. I think the longs are already positioned nicely and it's trying to break higher, but it's clearly a big pivotal zone. So I'd really keep a file on, keep an eye on what's happening here in terms of the 36.10s, 36 in general. Close above that would be bullish, bull bear line going on here. Okay. What else have we got? Just going through some of the questions. Yes, yeah. I mean, crude, no real change in outlook for us, right? We're talking about the fact that it takes time to build bottoms, the fact that it could be complex and it could take time. But as far as we're concerned, we looked for it to ultimately find a base here at the 50 to 45 range, okay? And we had that 47.50 as a pivotal level in the middle, right? That pivotal level, we came in, we tried to rally off this, we got some acceleration, nice support, nice, so very pivotal level inside this zone. So right here, the moves have been very aggressive. It's come back down, it's holding, got sold hard, it's holding. So it really looks like it wants to try and take a stab back to to those 55s, right? That's the big level it has to clear. Unless it closes back above that 55, it'll likely stay pressure on, and it might still take some time for it to bottom. But it looks like it's trying to give it a good chance at basing. Okay, good stuff. Any comments? Any questions? Any pair anybody wants to look at we've missed? Okay. DAX, what's going on DAX? DAX, basically, this is a chart we've had on DAX. for a while, and we said, you know, it just looks like it's really choppy at these highs, and it looked like it was unable to attract new buyers at highs. You see, you know, you had this move, the 50 back held, and bam, through the 123, and it looks like people were taking profits. Sellers were coming in ahead of this 150 extension, 161.8 extension, and you know, it was hovering, and it was possibly putting in some kind of a top right here. With all this positive news out of Greece, it looks like it really wants to rip, and it wants to break from a higher level. But you know, clearly I'm not going to be buying highs. If anything, I'm looking for possible failures at high inside this 50 to 61 zone. So a lot of choppy action. The charts on the blog, no big level, you know, no big change. These are really the levels we're watching. Okay. Do I think the Nikkei is getting interesting? I don't really look at the Nikkei, so I don't even know if they have it here on FX Pro, but I prefer to focus on the ES. I don't really trade the DAX much either. Any comments, any questions, anything we've missed, anything anybody wants to discuss? Okay, rock and roll, guys. So I'll post the recording on YouTube. I'll send it out on Twitter. I'll send it out on the blog. Again, if any of you guys caught the back end of the session, if you just sign up to the blog, um, you'll get the email telling you this thing's going on straight into your inbox, so you won't miss it waiting around for Twitter. So again, I don't spam. The only thing that comes if you sign up on the blog is basically you get an email every time there's a new blog post, and there's about probably 2 posts a day or something like that. You know, you're never going to get all those hey, sign up for a new webinar, oh, sign up for a new course, or I've got a new strategy every 3 months. There's a new revolutionary strategy to trade, to buy yourself a Maserati, and then after another 3 months, oops, there's a different one, etc., etc. You know, no crap. I don't even have access to your email addresses. WordPress has them, so it's just the posts that go out, okay? So guys, have an awesome one. Have a great weekend, right? Have a great one. And keep in mind, there could be some event risk. We still got some my pleasure, man. Some possible tape bombs exactly out of the wires on Monday. You know, stay safe. Again, let's see what happens. Again, thanks for listening, guys. Have an awesome one. Have a great trading day today, and have a great weekend, okay? Take care, guys. Bye.